From here, guys, we will talk about fixed capital and working capital. It is a part of financial management. Fixed capital is the capital which is required to acquire fixed assets or long-term assets. And in long-term assets, you know that in business, mainly fixed assets are needed by businesses, whether it is land, building, plant, machinery, or vehicles, equipment, computers, or even intangible assets like patents, software, trademark, and so on. So, while deciding how much capital you require to start a business, you should also distinguish as how much capital you require to acquire fixed assets and how much capital you require to acquire current assets. The capital that you need to acquire fixed assets is called fixed capital, and the capital that you need to acquire current assets, that is cash balance, bank balance, debtors, that is trade receivables, inventory, that is working capital. So fixed assets like land, building, plant, machinery, furniture, vehicles, patents, copyrights, trademarks, etc. And current assets like stock of raw materials and finished goods, cash in hand, cash at bank, etc. These are needed by every business, right? Without any of these, you cannot continue with your business. The capital required by a business to acquire long-term assets, that is fixed assets, is called fixed capital. Fixed capital is required not only while establishing a new enterprise, but also for expansion, diversification, modernization of the business. So when you expand your business, that is when you expand your scale of operations, you require additional fixed assets. When you diversify your business, your existing fixed assets cannot help you in that. Why? Because you are now going for the new product lines which require different types of machineries, equipment, and so on. And for that, you again require new set of fixed assets. And for modernization, you replace your existing fixed assets so that you could work with state of the art technology and methods. Apart, fixed capital is also needed for long-term investments, especially trade investments, that is investment in associated business enterprises. So if from your company you want to make one more company which is called a subsidiary of the original company, for that out of your original or existing company you have to take out some resources and have to establish a new business, new company, and that is called such investment by your existing business is called trade investments. And that is a long term investment because such investment you would not like to liquidate in a short period. Like Reliance Power is subsidiary of Reliance Energy. So Reliance Energy Limited was first established after running it for some years when it had additional cash resources. Those cash resources were taken out from Reliance Energy, and with that, a new company was established that is called Reliance Power. So, for such investments in your own business but in different company, you also require fixed capital. Have you understood this much, guys, or not? Ahana, Anushka,
Yes, sir.
Ashutosh, Sunar,
So,
Navneet, and Aryan.
yes, sir.
Note that capital invested in long-term assets cannot be recovered quickly. ये पैसा जो आपने लॉन्ग टर्म एसेट्स में लगाया है वो तुरंत नहीं आप रिकवर कर सकते बिकॉज you require huge amount of investment in these long term assets, whether it is land, building, plant, or machinery. They take a lot of money to have ownership on these assets, and that huge amount of money you cannot recover in few years, but it takes time because the amount invested in such assets is very large. So that money you cannot recover just in 1 or 2 years. And that is why, for that, the capital that you bring in the business to acquire such large, such expensive assets should also be for the long term. Am I clear? Have you understood the
Sir.
last part, guys, everyone? What I just explained?
Yes, sir.
Yes,
Yes,
sir.
sir.
Therefore, business enterprises arrange fixed capital from those sources where the money is also to be refunded in long run and not quickly. तो अगर आपने शॉर्ट टर्म का लोन लेके एक बिल्डिंग परचेज की है, then that will not work at all. Why? Because once that short term period is over, you immediately have to pay to the lender from whom you have borrowed funds, and that you cannot do because building will not, the building cost you would not be able to recover in short period. What I'm trying to tell you is that, guys, to have funds to acquire fixed capital, the funds should also be for a long term period. And this is how matching is done of the two sides of balance sheet. And of balance sheet of a business or of a company has two sides. You all know this. One is asset side, second is liability side. In assets, you have long term assets and short term assets, that is current assets. To fund your long term assets, the funds that you are sourcing, that should also be for the long term. So you should take loan of 15, 20 years to acquire land, building, and similar assets which have huge amount invested into it. Fixed capital is also called block capital as it remains blocked in fixed assets for years. And you cannot take out that money, because if you do so, you have to sell your fixed assets. And if you sell, you cannot continue with your business. In fact, most of the funds with which a business is started goes to acquire fixed assets. जितना फंड से आपने बिजनेस स्टार्ट किया है, उस फंड्स का मैक्सिमम पार्ट फिक्स्ड एसेट्स को एक्वायर करने में चला जाता है, इसीलिए हम फिक्स्ड एसेट्स को कैपिटल एसेट्स भी कहते हैं, because most of the fixed assets have been financed through your long term capital, whether it is borrowed funds or owners funds. So guys, this is how we have understood about fixed capital. I am sure you all are clear with fixed capital now. So now let's understand the factors that affect requirement of fixed capital. आपके बिजनेस में फिक्स कैपिटल कितना चाहिए आपको, उसके लिए क्या क्या फैक्टर्स हैं, वो उसको हम अब देखने वाले हैं. The first one is nature of business. If your business is a service business, then you require very lesser amount of fixed capital. So whether you are into education business or in healthcare or in training or in software services, you require very lesser amount of fixed capital, because in such businesses, fixed assets do not take much amount as compared to a trading business or a manufacturing business. So manufacturing businesses require the most fixed capital due to involvement of huge fixed assets like land, building, plant machineries, equipment, furniture, vehicles, etc. A service business can be run in a rented premises, but not a manufacturing business, because you take a piece of land or a building on rent for your manufacturing business, and after some years, if the landlord says that okay, now you vacate the building or my place, you cannot take out your all plant and machinery and can shift it somewhere. Why? Because plant and machineries in big businesses and big manufacturing businesses, they are erected, they are assembled at the place of production, right? And therefore manufacturers always first purchase land and building, and then only they have their setup of manufacturing or production. And to purchase, to own that piece of land or building, you would require huge amount of capital as compared to a service or a trading business. Trading businesses require lesser amount of fixed capital due to lesser needs of fixed assets. Here you require only furniture, building, vehicles, that's it. You do not require plant and machinery at all. Service businesses require the least amount of fixed capital. So this is how nature of business also affects amount of fixed capital that you need in your business. Is it clear to everyone?
Yes, sir.
Yes, sir. Yes, sir.
Public utility companies, that is those who are into business of providing transportation services or power distribution, or municipal corporation, they also require heavy investment in fixed assets. And such investment is in crores, is in hundreds or thousand crores, because without that you cannot have such setup where you can start producing utility services, whether it is transportation or power generation or telecommunication or any other such service. Second is scale of operation, that is size of the business. Scale of operations means how many units you are going to produce. If the scale of operations is more, you would be requiring more investment in fixed capital, means in fixed assets. If you have smaller scale of operation, then you would be requiring lesser amount of fixed capital. So firm working on a large scale, that is huge production, requires bigger plant, more space, etc. Therefore requires higher investment in fixed assets. Hence, its fixed capital requirement is larger than a firm which is operating on a small scale, right? So think of a bakery shop who also makes cookies, cakes, and some other confectionery items. How much fixed capital they require on the basis of their fixed assets requirement. And think of a large national level company like Britannia, which is also producing cookies, but their requirement of fixed assets are much more than a nearby baker. Third, guys, is choice of production technique, that is nature of production. In economics, you all have learned that production techniques are of two types. One is capital intensive and second is labor intensive. If you have more of labor intensive, as it usually happens in small scale industries, then you require lesser investment in fixed assets, that is lesser amount of fixed capital. But if you are a large manufacturing unit, then you require more amount of investment in your fixed assets and thereby more investment, thereby more requirement of fixed capital. So if capital intensive techniques is used, more investment is needed. If it is labor intensive, then you require lesser amount of fixed capital due to lesser requirement of fixed assets. Understood, guys, this much or not? The 3 points so far.
Yes, sir.
Yes, sir. Yes, sir.
Next is technology upgrade. So where products obsolete soon and requires upgrade in technology, obviously you have to replace your fixed assets very often and therefore you require more investment in your fixed assets. But okay, such industries are mobile phones, computers, and here you require more amount of fixed capital. And if you are into the business of furniture or let's say steel utensils, where such upgrades, such changes are not required much, and therefore you require lesser investment in fixed assets. Fifth is nature of products. So, firm manufacturing simple products like soap, toothpaste, that is smaller products which are fast moving, semi durable consumer goods, then their investment in fixed capital is not much as compared to the manufacturing units which are producing bigger machines like earth removing vehicles, that is JCB machine. On the other hand, the firms producing items like steel, cement, automobiles, heavy machineries, etc., require large amount of fixed capital. So, nature of product also decides your requirement of fixed capital. I hope these 2 points are also clear to you guys. Correct?
Yes, sir.
Yes, sir.
Diversity of product lines. More the product lines you have, more or different types of machineries you would be needing, and therefore your investment and fixed capital would be more. And if you have lesser number of product lines in your business, then you would be requiring lesser number of machines, and thereby your requirement of fixed capital would be lesser. So more diversified products of business manufacturers, more fixed capital requires than those who manufactures fewer and similar products. Mode of acquiring fixed assets. Now, how you are acquiring your fixed assets, whether you are acquiring fixed assets by putting the capital or by paying the money to acquire fixed assets in one shot, whether it is your own money or borrowed money, or if you are acquiring fixed assets on lease, on a long term lease, or on installment credit basis, then you require lesser amount of fixed capital at the beginning. So when fixed assets are purchased on down payment, that is paying the money upfront, the entire money, then more fixed capital is needed than purchasing fixed assets on hire purchase or installment credit basis, or taking assets on rent or long term lease. Right, guys? In the industrial hubs that we have around, most of the land is owned by government and it is given to manufacturers for a lease of 49 years, 99 years, and so on. Eighth is level of collaboration or third party arrangement. Now, sometimes, guys, you run your business in joint venture or in collaboration with third party, and in that case, some arrangements of fixed assets are done by third parties, and therefore you have to invest lesser amount from your pocket in fixed assets. So sometimes certain businesses share each other's facilities or facilitates provided by a third party, like banks use each other's ATMs. So in that case, every bank does not need to have spread off its own ATMs, but because of this mutual arrangement, one can use ATM of any other bank also. Similarly, airline companies use airports of a third party, that is Airport Authority of India. So these airlines do not have their own airports, and this is how they get rid of investing in airports themselves. Is it clear to everyone, guys?
Yes, sir.
Just hold on, guys, for 1 minute, everyone. In such cases, they save huge cost of investment in fixed assets, guys. In, if because of third party arrangement or you have collaboration with others to use the same assets. The capital needed to invest in current assets is called working capital. Current assets mainly include debtors in case you are in the business of providing credit to your customers, stock in trade in case you deal in goods, and cash required for meeting day-to-day expenses. So cash is needed by every business, whether you are into manufacturing or trading or into service business. Debtors and stock in trade depend upon the nature of business that you are into, right? It is also known as circulating capital, guys. Why? Because money you invest in these assets and these assets again come back to you in form of money. When you sell your stock, the money comes back to you. When you recover money from your debtors, again the money comes back to you, and again it gets reinvested in new debtors or the same debtors, because you have to sell this goods and services to your same customer again and again on credit. So money goes out from your pocket in stock, that is to purchase or acquire stock. That stock you sell to your debtors. So this is how your stock gets converted into debtors, and after some days you recover money from your debtors. That is cash again comes back to you, and that cash again you use to purchase new set of stock, and the circle goes on, and that is why we call it circulating capital. Am I clear? Is it clear to everyone, guys?
Yes, sir.
Yes, sir.
Navneet, Ashutosh, Hunar, are you understanding this?
Yes,
Yes,
sir.
sir. So,
Thus, it is invested in, recovered from, and reinvested in current assets. You first invest in current assets, then you recover from it in form of cash, and again, what's your cash you have recovered? By taking some amount of profit out of it, you again reinvest the rest. And if you want to grow, if you want to expand your business, then you take very lesser amount of profit out of it, and most of the money that you recovered, that you invest entirely in your current assets so that you could expand your business. It keeps on revolving from cash to goods to debtors and back again to cash. This I have just explained here, guys. From cash you purchase goods, goods are sold to debtors, and debtors again come back to you in form of cash. The cycle of its movement from one current asset to another is called working capital cycle or operating cycle. This cycle is expressed in form of a period, which is in days or sometimes in months, in case you are into manufacturing of larger products, bigger machineries, or into automobile business or into electronic goods business. So let's understand working capital cycle of a manufacturing business. You first have to be in the business with cash. With that cash, you purchase raw material, and for that, you have to pay cash to suppliers initially. In case you are new in the business, no supplier will give you credit, and therefore, you have to pay cash to have raw material. That raw material you keep in your business for some period because you always would like to maintain some stock of raw materials so that if there is no fresh supplier from your suppliers because of, let's say, transportation strike, then your production should not go to a halt. And that is why every manufacturer maintains raw materials of some days. That raw material later goes in machines, and until it comes out from machines in form of finished goods, that is called work in progress. So the raw material which is in the machine, which is neither in form the actual raw material nor has yet been converted into finished goods, is called work in progress. From work in progress, it becomes finished goods after some time. These finished goods are sold to your debtors, and after some days, debtors pay you money. So this is working capital or operating cycle, and these are the periods. That is, you pay money to your suppliers once you win their trust that you would be paying them money after a certain days, and those days are 20 days. They start giving you credit. You in this example here, you would or you want to maintain a stock of raw materials for at least 10 days. Now what does this mean, guys? Is suppose in a year we have 360 days and not 365 days. Okay, let's take that there are 365 days in a year as it is, and you require total raw materials for your production of rupees 3,65,000. Cost of raw materials to have your yearly production is 3,65,000. It means for each day, the cost of raw material is rupees 1,000. You want to maintain a stock of raw materials of 10 days, it means you would always be having stock of raw materials of rupees 10,000. So this is what I meant here by 10 days, guys. आप हमेशा 10,000 रुपए का रॉ मटेरियल का स्टॉक अपने पास रखना चाहोगे, जैसे हम अपने किचन में शुगर का, टी लीव्स का कुछ स्टॉक हमेशा रखते हैं, so that next morning we do not need to rush to the market to have sugar and tea leaves to have a first cup of tea. The same way, manufacturers also maintain some stock of raw material, some stock of finished goods, so that neither their production go to a halt, nor they have to say no to their customers कि आज finished goods नहीं है, कल आना, आज हम आपको कुछ नहीं बेच पाएंगे. And for this purpose, for this reason, they maintain some stock of raw materials as well as finished goods. So the stock here of raw materials being maintained by this business is of 10 days. 2 days that you find here in work in progress is the processing time. You insert raw material today, after 2 days it will come out from the machine and will become finished goods. The 15 days against finished goods is the number of days for which you want to maintain a stock of finished goods, so that in case your machines break down, then also you do not need to say no to your customers, because now you will, after breakdown of machines, you will not have fresh supply of finished goods from your shop floor, from your production house to your warehouse of finished goods. तो इसलिए हमेशा फिनिश गुड्स का 15 दिन का स्टॉक मेंटेन करके रखते हैं. मतलब your money is stuck in finished goods for 15 days. Your money is stuck in work in progress for 2 days, because all these require money. Your money is stuck in raw materials for 10 days. If you are allowing credit of 30 days to your debtors, again your money is stuck with your customers for 30 days, and after 30 days only you will get back the money back from your customers. So here the working capital cycle is 10, that is of raw material, plus 2 of work in progress processing time, plus 15 of finished goods, plus 30 with daters. The sum total of this is 57, and your supplier is giving you period of 20 days. It means for 30 days, 37 days operation, you have to put money from your own pocket. And this 37 days actually are expressing your working capital requirement. तो साल भर में प्रोडक्शन में जितना आपका खर्चा लगता है, उसके हिसाब से 37 डेज का पैसा आपको खुद अपनी जेब से लगाना होगा, और बाकी का फिर सर्कुलेट होता रहेगा। आपने फर्स्ट 37 डेज का पैसा बिजनेस में लगा दिया, किसमें? वर्किंग कैपिटल की बात हो रही है यहाँ पे गाइस, फिक्स्ड एसेट्स की बात नहीं हो रही है। उसके बाद वो अपने आप आपके पास रोटेट होके आता रहेगा, एंड दैट इज व्हाई वी कॉल इट ऑपरेटिंग और वर्किंग कैपिटल साइकिल। इज इट क्लियर टू एवरीवन गाइस और नॉट? और यू हैव एनी
Yes,
क्वेश्चन और
sir.
डाउट हियर? आई एम आस्किंग एवरीवन।
No, yes, sir.
Yes.
It means money invested in current assets is recovered after 37 days. जब आपने business start किया, that time you put some money in working capital, and that money was equivalent to your 37 days operations. Once you put this money, after 37 days, after every 37 days, it will come back to you and you will reinvest it again in your business. That is in your current assets. That is the business needs working capital for 37 days. When there is no credit available from suppliers of any goods or services, the total of current assets is called gross working capital, which the business needs to arrange itself. जैसे हमको पिछले एग्जांपल में गए, in the last example we were getting credit of 20 days from our suppliers, and thereby the net working capital that we require was only for 37 days. But in case in your business there is no credit available from suppliers, then the total amount that you require to have your current assets, to acquire your current assets, is called gross working capital. And in case you are getting some credit either from your suppliers or short term lending from your banks, then the net of your current assets minus the short term liability that you have in form of either liabilities towards the suppliers or liabilities towards any short term lender, the net of the two would be called your net working capital. So therefore, gross working capital is equal to current assets. And when credit from suppliers is available, the business needs to arrange funds not for all the current assets, but for the net of current assets and current liabilities, that is creditors for goods and services, which is called net working capital, which is current assets minus current liabilities. Am I clear, guys? Now, in case you have net working capital as negative amount, Aryan, are you saying something? Aryan?
No, sir.
In case, guys, you have net working capital in negative, it means some part of your current liabilities, that is short term liabilities, you are using to acquire your fixed assets, and which is very dangerous in business. So, guys, we have understood what working capital is, what is gross working capital, and what is net working capital, and also what is working capital or operating cycle. Now, types of working capital. First is permanent working capital, which will always remain invested in your business permanently. So capital needed to maintain minimum amount of current assets is called permanent working capital. This permanent working capital actually denotes your normal level of business operations. जब आपका business normally चल रहा है, जैसे हमेशा चलता है, not in exceptional cases, तो उस समय आपको कितने working capital, मतलब कितने current assets की जरूरत पड़ती है, that is your permanent working capital. Being permanent, it should be financed with long term sources of finance. क्योंकि ये परमानेंट कैपिटल है, वर्किंग कैपिटल, इसलिए आपको कोशिश ये करनी चाहिए कि इसको आप अपने लॉन्ग टर्म सोर्सेज ऑफ फाइनेंस से, जो वो पैसा जो आपके पास लॉन्ग टर्म के लिए आया, उससे आप इसको फाइनेंस करें, मतलब उससे आप इन एसेट्स को एक्वायर करें. It can be further classified into the following two. One is initial working capital that you require at the time of initiating or establishing your business, because after some time from the date of establishment of your business, when your business actually gets established, you require some more amount of working capital, क्योंकि by that time आपकी sales थोड़ी सी बढ़ जाएगी initial level से. So needed when a business started, as that time usually no credit is allowed from anyone including suppliers. इनिशियली आपको कोई क्रेडिट नहीं देगा. इसके बाद पहले बारे में हमने थोड़ी देर पहले भी बात की थी. When you are new in the business, new in the market, no one trusts you and no one would be giving you any credit. And second is regular working capital. So capital which is required for continuous business operations, that is the capital needed to maintain adequate cash balance to meet business expenses, needed to maintain certain level of stock and debtors. This is your regular working capital. Have you understood this, guys? What is initial, what is regular working capital?
Yes, sir.
Yes, sir.
Regular working capital obviously would be more than initial working capital, guys. Even though in regular working capital you also have some amount of current liabilities, then also it would be more. Why? Because once your business gets established, your business activities actually expand. So आपको ज्यादा स्टॉक, ज्यादा डेटर्स, ज्यादा कैश एंड बैंक बैलेंस अपने पास रखना पड़ेगा. इसलिए आपकी रेगुलर वर्किंग कैपिटल हमेशा इनिशियल वर्किंग कैपिटल से ज्यादा रहती है. Second is temporary working capital. Now, when you require additional investment in current assets only temporarily, not permanently, then we call it temporary working capital. So, if you are into seasonal business or your business gets affected because of change in season, then in some seasons you will have high demand of your products and therefore you need to maintain higher amount of stock. Your debtors would also be more because that time your sales would be more, and you also would require cash